Hi everyone, welcome again. We will continue with income tax of ACCA F6. In the previous lectures, we made the pro forma income tax pro forma. Now, what the income tax pro forma was that we listed out all the sources of income from which we can earn the income. Remember, there were different sources of income: employment income, property income, interest income, and dividends income, and a couple of more as well. All right. Now, in this lesson, we will continue from income tax where we left in the previous lecture. I told you that there are a couple of sources of income which are important as far as New Finance Act is concerned. Them are interest income, as I listed on the board, and dividends income. Now, the reason it is important for you to understand, especially in this finance act, is, and again, especially if you are retaking this exam, because if you have failed this exam before and you are retaking it, then you should watch this lecture very, very carefully, because the way we used to deal with interest and dividends before was different than we will do now. Because in the New Finance Act, which is Finance Act 2016, as you know, up until the exams up until March 2018, this Finance Act will be relevant. So in this Finance Act, there has been some changes the way we deal with the interest income and the dividends income. All right. Now, if you're taking this exam for the first time and you haven't taken this exam before, then you do not need to worry about it. I will tell you how we will do now rather than how we used to do. All right. So forget about past, whatever happened, even if you have taken, and if you haven't taken, that's very, very good. So let's start with interest income and the dividends income. Now, when we made the income tax pro forma after listing all of the sources of income, what we used to do was we used to add all of the sources of income. There were different sections, if you remember: non-savings, savings, and dividends. Dividends used to go into the dividends. Interest income will go into the savings income, as you have seen in the previous lecture, and all other sources of income will go into the non-savings. After making total of all of them, there was a table given, and it is given on your notes if you check page number 1. Now, we have to total all the sources of income and we have to calculate how much tax we have to pay. How can we calculate the tax? That is the table which is given to you on the notes, and this exact table will be given to you in the exam hall as well. In exam hall, when you see the paper F6, first few pages of paper F6 will be tax tables. So it will tell you different tax rates, allowances, and some exemptions as well. All right. So it will be given to you in the exam, and this table, which you can see underneath the income tax pro forma on page 1, that table will be given to you in the exam. Now, income is divided into different bandings: starting rate band, then basic rate band, high rate band, additional rate band. So there are different bands. All right. So according to that, the income tax liability will be calculated. Now, there are different rates of tax. It depends on which source of income it is. If it is interest income, it might be different. If it is employment income, it will be different. All right. You can check on your tax table as well. In the next video, I will also share the screen with you, so we'll read that tax table in greater detail as well. But for now, let's come to dividends. Let's come to this interest and dividend income as far as this lecture is concerned. Now, if your income, I'm talking about the interest income, if your interest income falls within first £5,000 of taxable income, then there will be different rate. Starting rate band will apply, and you do not have to pay any tax at all. That will be starting rate band. All right. I will revise again. If your interest income falls within the £5,000, then you do not have to pay any tax. There will be something called starting rate band. Now, this starting rate band only applies to interest income. It does not apply to anything else. Starting rate band only applies to interest income, and starting rate band is what the starting rate band says, that from £1 to £5,000, if it is interest income, then you only have to pay tax at the rate of 0%. Correct? That's interest income. Now, say for example, if someone had some of the income was non-savings income and some of the income was savings income, and that part of savings income, some of that would fall within the first £5,000, then that part would also be considered within the starting rate band. Now you might not understand this, you might be confusing yourself here with my confusing statements, but we will do a little question here, then you will understand it better. Now what I mean to say is that taxable income is after calculating the personal allowance, right? So we will see that, and we will have to see that that amount after deducting the personal allowance, that some of that amount is non-savings income and some of that is savings income. All right. Now that non-savings portion is £2,000, whereas savings portion is more than that. Now we will have to total that. Now whichever portion of savings income is coming in £5,000 will be according to the starting rate band, and rest will be according to the basic rate bands. All right. So to summarize that, if first £5,000 falls within the savings income, then we will apply the starting rate band, and that will be taxed at the rate of 0%. All right. So we'll have to tax at the rate of 0%. Excuse me. Now on top of that, what we get is known as nil rate band. Now interest income nil rate band. Now this is the new thing in the interest income. Nil rate band means that this is separate thing and that is separate thing. A nil rate band means that you have to pay tax at the rate of 0%, at the rate of 0%. But for how much, it depends on which band your income falls in. Now say for example, if you're a basic rate band taxpayer, now basic rate band limit is, I guess, from £1 to £32,000, isn't it? So from £1 to £32,000 is basic rate band. Now if you are a basic rate band taxpayer, then you will get £1,000 of nil rate band. So up to £1,000 you will have to pay tax at the rate of 0%. Remember, this 1,000 is on top of this one. Now this is separate thing, that is separate, so we'll have to see that. Second thing is that if you're a higher rate taxpayer, then you will also you will get this one, but you will also get £500 of nil rate band. If you're a basic rate taxpayer, £1,000. If you're a higher rate taxpayer, you will get the nil rate band of 500. Now this is interest income nil rate band. We're talking about the interest income nil rate band. And remember from your previous lecture, when we see the interest income in our question, we'll just take the same amount and we will put in directly into our pro forma. We do not need to do anything with it. In the previous Finance Act, we used to gross up the amount, and we used to put the gross amount into our income tax pro forma. But from this Finance Act, gross amount will be given to you in the question. You do not need to do anything at all. There is one interest income which is given net in the exam, which is received net, but that is not in our F6 syllabus. As far as F6 is concerned, all sources of income will be received gross, so you do not need to do anything. You just pick the amount from the question and you just put into our income tax pro forma. Same applies to dividends income. You do not need to gross it up. You do not need to do anything. Just pick the amount and put straight into our pro forma. Do not need to do anything. So that is our dividend income. Dividend income is income. When I hold some shares in a company, I will be paid dividend. I will be paid profit of the shares. So when I get the profit on the shares I hold in a company, that are known as dividend income. So when I see dividends income in my income tax in my question, I'll just pick the same amount and put into the income tax pro forma. All right. Now, if your dividend income is within £5,000, then what you will get is a nil rate band. Now you will have to apply the tax at the rate of 0% if your dividend income is within £5,000. Now, this £5,000 nil rate band, is it for basic rate taxpayer, higher rate taxpayer, or additional rate taxpayer? It is for everyone, it says. So even if you are a higher rate taxpayer, you will still get same amount, £5,000 of nil rate band. Remember, it is different from interest income nil rate band. In interest income nil rate band, we used to get different amount if we were basic rate taxpayer. If we were additional rate taxpayer, it was different. Sorry, if it was higher rate band taxpayer, it was different. If we would have been additional rate taxpayer, we do not get any nil rate band in interest income. Whereas in dividend income, even if we are basic rate taxpayer, higher or additional rate taxpayer, we will always get £5,000 of dividend income nil rate band. So up to £5,000 of dividends income, you do not have to pay any tax. What you will have to do is 5,000 multiplied by 0%. So the dividend income tax on the dividend income is 0. All right. Whatever is on top of that, the specific rates which are given into your exam question or in the notes, then them rates will apply what is excess or on top of the £5,000. All right. So that is dividend income nil rate band and the interest income and their nil rate bands. All right. So let's do some questions so that we can understand this concept better. Right then, I will just read out the question so that you can write on your notebook as well if you cannot understand my language, writing. So I will just read out. Please make sure you write down on your notebook and try to solve these questions. And we will do together anyway, but try to solve on your own. Mr. A has rental income of £13,000 and interest income of £4,000. He also has dividends of £5,000. So that is our first question. Right then, let's start together. If you want to do, just pause the video and do it yourself. So he has got £13,000 of income, which is non-savings income. I'll just write it down like this. Then he has got interest income as well, which will go into the savings. And how much it is? It is £4,000. So he's got £4,000 of that income as well. If I make the total of that, total is £17,000, isn't it? Alright, has he got anything else? Yes, he has actually. He has got some dividends as well. So I will have to erase this one. He's got some dividends. So I will have to write down the dividends as well. And how much dividends he has got? He has £5,000 of dividends as well. So £5,000 of dividends. If I make the total of that, total comes to 13 plus 4, 17 plus 5, 22. So that is £22,000. Alright? Now that is £22,000. And what I will have to do is, I will just write down 22,000 here. So that is £22,000. That is total. Now what we'll have to do is, I will have to deduct personal allowance out of it. Alright? So how much is the personal allowance? Personal allowance is £11,000, isn't it? The remaining amount is £11,000. Right? So that is £11,000 remaining. Now within this £11,000, this £11,000 has got savings income and dividends income and £2,000 of non-savings income. Right? How? I'll just show you. Now when deducting this £11,000 out of this total £22,000, you remember there was a preference. First we used to deduct from the non-savings income, then from savings income, and at loss from dividends income. So if I deduct this £11,000, I would deduct first from non-savings income because it has deducted all of it from here anyway. But if there would be if there still would be left some, there would be some left still, then we needed to deduct it out of the savings income and in the finally in the dividends income. All right. So if I deduct out of that, it will be £2,000. So that is remaining out of the non-savings income. Now in this £11,000, I got £2,000 of non-savings income, 4,000 of savings, and 5,000 of dividends income. All right. So that is my taxable income. Now I need to calculate the tax. All right. Now £2,000 in here, £4,000 in this one, and £5,000 in here. All right. So altogether £11,000. Now let's see here. We will get starting rate band of £5,000 if interest income falls in £5,000. Now see here, £2,000 here Now how much more is left? £3,000 more is left, isn't it? If interest income falls within £5,000, or whichever portion falls within first £5,000, that portion will be according to the starting rate band. Alright, so 2,000 plus 3,000 is equal to £5,000. So 2,000 here, but we will take 3,000 out of that to make it £5,000. So out of this 4,000, 3,000 will be at the rate of 0%. Why? Because we will get the starting rate band. I will just write SRB. So that will be starting rate band at the rate of 0%. Alright? Now how much more is left out of that is £1,000, isn't it? Alright? Now what he will get is, he will additionally get a nil rate band as well. It depends on which taxpayer is he. Is he a basic rate taxpayer, additional rate taxpayer, or a higher rate taxpayer? Now in this case he is a basic rate taxpayer, so he will also get a nil rate band of £1,000. So the net liability will be at the rate of net tax liability, net tax payable. Taxable amount is 0, because this will be applied at the rate of 0% as well, because it is also according to the nil rate band. Alright. Now what about the dividends income? He will also get £5,000 of dividends, but will have to pay any tax liability on tax liability on that? No. Why? Because everybody gets £5,000 worth of dividend income nil rate band. So what we will do is, we'll take £5,000 and we will have to pay the tax at the rate of 0%. Why? Because it will be covered by the nil rate band. Alright? So it will be covered by the nil rate band, so you will not have to pay any tax liability on that. Now what is left here? Only thing which is left here is this £2,000, isn't it? £2,000 is left, so we'll have to do is £2,000 at the rate of 20%. So whatever the tax liability is, 400, that is the amount which is his tax liability. Alright, so what we did, I'll just revise again. This was the savings income, non-savings income of the £13,000, then £4,000 of interest income and dividends of £5,000. Now this dividend, straight away we can say that this dividend is covered by the nil rate band, because everybody gets the nil rate band. Excuse me, everybody gets the nil rate band of dividends. So this £5,000 will be covered by the nil rate band of dividends, so we do not have to pay any tax on that. If we talk about the non-savings and savings income, first we need to deduct personal allowance. Personal allowance preference would be from non-savings income first, then from savings, and then from dividends. But it is already, it will already be deducted from the non-savings income anyway, so we will deduct it out of the non-savings income. The remaining amount is £2,000 here, £4,000 here. Now, if the interest income falls within first £5,000, or whichever portion of interest income falls within first £5,000 of taxable income, that portion will be subject to starting rate band. Now, how much of this savings income falls within first £5,000? 2,000 plus 3,000. So we'll take 3,000 out of that to make it 5,000, first 5,000. So 3,000 will be according to the rate of starting rate band, so at the rate of 0%. The remaining is £1,000. It will also be considered at the rate of 0%, because he will get the nil rate band as well, as far as interest income is concerned. Alright? Now, there is nothing left here, nothing left in the dividends. Only thing which is left is £2,000 here. So we'll have to calculate at the rate of 20%, and that will be tax liability of £400. Alright? Likewise, I want you to do the second question as well. In the second question it says Mr. B has employment income of £60,000, interest income of £1,000 and dividends of £7,000. Now please have a go at it, because I won't do this question. I'll just tell you how to do it so that you can have a go at it as well. First is employment income. He is earning £60,000 a year. So £60,000 plus 1,061 plus 7, £68,000 altogether. Now 68 minus, first we need to deduct his personal allowance. 68 minus £11,000. How much? 56,000 pounds, I think. So £56,000 is taxable income. So out of that £56,000, what we need to do is we'll have to see which band are we in. Are we basic rate taxpayer, higher rate, or additional rate? We are higher rate taxpayer because our income is more than £32,000. So if our income is more than £32,000, this won't apply anyway because it is way above £5,000. It is too much money. So this starting rate band won't apply anyway, right? Because it will be covered by the non-savings income anyway. So forget about this starting rate band. Think about this nil rate band. How much of the nil rate band will he be eligible to? He will get £500 of nil rate band because he is a higher rate taxpayer, isn't he? So how much is it? Out of that £1,000, 500 will be covered by the nil rate band because he will get nil rate band at the rate of 5%. He will get the nil rate band of 500, so 500 at the rate of 0%. However, the remaining 500 will be according to the tax tables which you can see on page 1. So you will have to calculate tax according to that table. As far as dividends is concerned, everybody, even if he is higher rate taxpayer or additional rate taxpayer, he will be able to get £5,000 of nil rate band. So out of that £7,000, £5,000 will be covered by the nil rate band anyway. And the remaining £2,000 he will have to pay tax according to the tables. You can see the tables. Alright? So that's it for this video. We'll continue our income tax in our next lecture. If you want to note down everything I've written on the board, you can do so. If you do not want to do, it's up to you. Alright? So that's it for this video. Please make sure you download the lecture notes from our website, accountancytube.com. In the next video, we will do, I'll just share the screen with you anyway, but please make sure you have the lecture notes in front of you so that you can read as well when I'm reading out. Alright? That's it, and I will see you in the next video. Thank you.